Hey everyone, welcome back to the Unlocking Doors podcast. I'm Cory Meals and I'm here with my co-host Michelle Castle. Today we are going to be talking about something that everyone is asking about, and that is interest rates, why they are continuing to go up, and what effect it's having on the market. So, Michelle, this is going to be a fun one. Interest rates just hit 8% for the first time in a long time. It's the highest that I've seen in my real estate career for a 30-year fixed
Might have
mortgage.
been your lifetime. You just didn't pay attention.
Yeah, I was born in 1990, so I don't know what interest rates
No,
were.
but you were a little boy.
Yeah. So, anyways, interest rates just hit 8%. I've had buyers and sellers, because it affects everybody,
Right.
asking, number one, why are we seeing rates go so high? Well, and is it really high in the grand scheme of things?
Yeah,
when
it's
you
all
look,
relative, right?
right? It is.
I mean, is it high compared to what you're paying on everything else? No.
No, it's not.
Yeah.
So let's dive into that a little bit before we go into kind of what it's doing to the market. So what is it that is causing interest rates to continue going up right now?
Typically, when the economy is doing well, you'll see interest rates rise, right? So let's just really look back in time. We say rates are high, but relative to what? Well, relative to what we were paying 2 years ago,
Right.
rates are considerably higher.
Right.
Are they high? Not relative to where we are right now economically, but in comparison, yes. So, but what was happening at the time? I mean, like we were giving out spending vouchers at that time.
Right.
Like we were begging people to spend money. We were telling people, "Hey, guess what? Don't worry about paying your bills.
Yeah.
We're just going to let you not worry about making your mortgage payment or your car payment or your student loan payments.
And this is during like the COVID times.
This is COVID
to
times,
clarify.
right? Yeah, to clarify.
Yeah.
So rates went down because economically we were a mess.
Right.
And we were trying to just stimulate the economy. Well, the economy's been stimulated.
Yes.
So we went through that whole period of time. I think we've gotten in a big habit of spending money, and we continue to spend. So inflation is up.
Right.
So the cost of things are up. And let's just keep in mind, inflation is the demand is higher than supply, which pushes the prices up. Thus, we have inflation. And so inflation is still up because we're still spending. And unemployment, it is at its lowest numbers. Remember, during COVID, we had high unemployment.
Right.
Again, sign of some hard times. Rates dropped. We're just the opposite now
Right.
that we were then, which means rates are up too. So economically, on paper, we look like we are doing healthy, and rates are going to continue to rise when that's going on.
Right.
So the numbers that get tracked from the Fed standpoint to determine whether or not rates should go up or down is two of the numbers is inflation and unemployment. Both of those numbers look great.
Yeah. And correct me if I'm wrong, but since they've started raising rates, it hasn't really had an effect on either
It hasn't
one of
had an
those.
effect on either one of them.
And so based on that, they could continue raising rates.
They could
And,
continue.
We don't know when that's going to stop. And I wish we had a crystal ball. We would be billionaires. But
Yeah, wouldn't that be great?
yeah, but I left my crystal ball somewhere else.
I broke mine.
Yeah, we don't have a crystal ball. We can't tell what the future holds when rates may come down. However, people are kind of sitting on the sidelines and wondering, should I buy now? Should I wait?
Right.
When are rates going to drop? And I want to talk a little bit about what I think happens for people who do wait for rates to drop. And that could be 6 months. It could be 12 to 18 months. We don't know. There's just no way to know for sure. But
yeah, for a long time, people kept, spring's when rates are going to drop.
yeah,
Are they?
earlier in the spring, I heard it was summer. And then,
Yeah. I mean, the timeline keeps changing.
Yeah.
So while that's happening, how much life are you going to put off? I mean,
Right.
like how many of these decisions, how long are you going to be in a house that you don't like anymore? How long are you going to continue driving longer further than you have to drive?
Right.
How long are you going to be next door to this neighbor that you can't stand? You know what I mean? Like, are you going to continue to put life off waiting on a number?
Right. So everybody's saying that we're going to wait till, not everybody, but some people are saying they're going to wait until interest rates drop before they purchase because 8% is a ridiculous number.
Mm-hmm.
It is compared to, 2.75 or 3.25 that you
Right.
saw in the past 3-4 years. However, when rates drop, if they even drop very significantly, a lot of buyers are going to jump back in the market,
Mm-hmm.
and that's going to drive prices back up.
Mm-hmm.
We're going to see those really sharp runs in values again,
Mm-hmm.
and buyers are going to be outbid. They're going to have to forego
Yeah.
inspections, closing costs, because right
Mm.
now buyers have more
Oh,
negotiating power than
yeah,
they
they do.
have
Yeah.
in
I just see
maybe at
buyers
any
and
point.
sellers getting along more than they used
Yes,
to. I mean, like you can see buyers and sellers actually negotiating contracts instead of
yes,
a seller just going, "Hey, here's the price. You like it or not?"
yeah, yeah.
You know?
The sellers are kind of realizing, hey, we need buyers,
Yeah.
because it's, there's not 20 people submitting an offer on your listing anymore.
Yeah.
As a seller, that was great.
Yeah.
Now it's kind of changed a little bit, but from a buyer standpoint, I really think that if you have a property that you really want right now, and we can negotiate terms that work
Mm-hmm.
for you. Yes, it's an
Mm-hmm.
8% interest rate, but are you comfortable with that monthly payment? Do you
Mm-hmm.
qualify, and are you
Mm-hmm.
comfortable?
Mm-hmm.
If
Do it
rates
now.
drop, yeah, go ahead and buy it now. Get the
Mm-hmm.
deal that works for you now.
Mm-hmm.
And then if rates drop, you've already
Mm-hmm.
locked in your price.
Mm-hmm.
Now you can refinance if it makes
Mm-hmm.
sense, and you can drop your payment there. You can drop your interest rate there. But
Mm-hmm.
you're not competing against every other buyer
Mm-hmm.
who thought it was a good idea to wait.
Yeah. You're not overpaying all over again.
Yeah.
Yeah. The other opportunity that I see right now too. Actually, I want to share this story with you.
Okay.
I called a friend of mine, and we were just talking about the market. He's in the banking industry, and so I asked him, you paying attention to what's going on in the market? And he said, well, absolutely. Every Friday, I'm looking to see what's available. Do you see anything interesting for sale? And he said, no. I'd really like to make a move, but I don't see anything I'm interested in selling. And I think there's a lot of sellers that are hesitating putting their house on the market because they don't feel that the buyer's out there.
Mm-hmm.
But I talked to a lot of buyers who would actually get out in the market and look if there was more available for them to look at.
Right.
So I think that you've got buyers and sellers sitting on hold when they just need to, just make a decision and live life.
Right.
Like,
Right.
if it's really something you want to do, don't let interest rates keep you from making a decision to put things on hold.
Right.
Just go for it.
Yeah, absolutely. And that's one thing, for any sellers that are watching right now,
Uh-huh.
which there's probably several people who might be considering
Right.
selling, and they follow along to this podcast because it's the number one podcast out
It's
there.
because it's the
It's
best.
the best. It's also important to understand from a realistic standpoint
Mm-hmm.
of what higher interest rates mean.
Mm-hmm.
And not to you as a seller, but to the buyer who's coming in to make an offer. 2 years ago, 3 years ago, they could have bought your house and given you the number that you wanted, but now they can't because they don't qualify for that
The
payment.
payment may be $300 or $400 more now.
Yeah, or I mean, $300, $400, $500, depending on what price point. And
Mm-hmm.
so that's something that really impacts affordability.
Mm-hmm.
And having realtors that understand, okay, here's how we can, you can offer a concession,
Mm-hmm.
or to buy down their interest rate to
Mm-hmm.
help them afford that payment. I mean,
Mm-hmm.
there's all kinds of strategies,
Mm-hmm.
and being able to talk with loan officers, and it really has become more of a team effort
Oh,
in
for
getting
sure.
these deals closed,
Mm-hmm.
and getting a deal that works for the seller, a deal that works for
Mm-hmm.
the buyer,
Mm-hmm.
and a strategy that
Yeah.
helps everybody get what they need out of the
Right. I
transaction.
always think of that as really like a puzzle. Like, give me all the puzzle pieces. The
Yeah.
seller has to net this amount. The buyer needs this. Payments need to be here. Oh, but we're okay doing a 3-year buy down, a temporary buy down to help them out with the payments for a little bit. So let's just get all those puzzle pieces on the table
Yeah.
and figure out how to make it work. But it is a teamwork effort. I mean, it's a buyer, seller, 2 agents, whoever's providing the money,
Mm-hmm.
just really getting their heads together and figuring it out.
And then, of course, the therapist that we all need at the end of it. Yeah.
Yeah.
No, totally
Yeah.
kidding.
We get a group discount though.
Real estate's fun.
Yeah. So they say.
Yeah. As far as, and I don't think there's any way that we can give a prediction of what interest rates are going to do.
I really think that we need to get we would just really need to wrap our minds around it. It is what it is right now.
Right.
Don't know how long it's going to be this way. It could possibly continue to go up. I don't see any drops happening until the late part of next year.
Hmm.
Anything significant. And even when we say significant, it's not going back to where it was.
Maybe we get from 8% to seven and
If
a
we could
half
get to,
or seven and a
even
quarter.
6.5, I think
Yeah.
that would be considered a low interest rate.
Right.
So really, if, we're thinking about it, so they're at 8, and best case scenario, we might get to 6.5 one day soon. Don't know when, might be a year from now.
Yeah.
And really wrap our minds around reality instead of living in this dream world that rates are going to drop and there's going to be just a bunch of houses available to purchase. And that was like utopia 2 years ago.
Yeah.
Those days are over.
Yeah. Absolutely.
Yeah.
Well, I figure we should shed some light on interest rates, what effect they've had on the market, why they are where they are at, and just kind of give some information for buyers and sellers to think about and how it's affecting the current market. So if you are thinking about buying or selling, if you have questions about financing, Michelle is the lady to talk to. She can get you hooked up and answer all your questions there. And if you want to know what your home could sell for, or you're curious about what to look for in the market, I would love to help you out as well. We hope you guys are doing well. Be sure and subscribe to the Unlocking Doors podcast, and we'll see you on the next episode.